Do you ever wonder why the 2008 financial crisis happened and how it affected banks? It's a question that still haunts us today. Let's take a trip back in time and unravel the circumstances that led to this economic calamity. Picture the early 2000s. The economy was seemingly flourishing. The housing market was booming, riding on a wave of optimism and easy credit. But beneath this glossy exterior, there were cracks forming. Banks, both big and small, were getting caught up in a frenzy of risky lending practices. Mortgages were handed out like candy, often to individuals who could not afford them. This was the era of subprime lending, a dangerous game that banks played, thinking they could pass on the risk to someone else. Meanwhile, banks were also over-leveraged. This means they were borrowing heavily to finance their operations and investments. They were playing a high-stakes game of poker, betting with money they didn't have. The problem, they didn't have enough capital to cover their losses if things went south. And then there was the housing bubble. Property prices soared as everyone wanted a piece of the real estate pie. But this was an illusion, a bubble ready to burst. When the bubble finally popped, it sent shockwaves through the banking sector. Banks were left holding a hot potato of bad loans and declining property values. This was the prelude to the crisis. A perfect storm of risky lending, over-leverage, and a housing bubble. Banks, blinded by their greed, ignored the warning signs. They thought they were too big to fail. But as we all know, they were wrong. The stage was set for one of the most significant financial crises in history. The repercussions were far-reaching, leading to the bankruptcy or government bailouts of major banking institutions. But what if we told you that a similar storm is brewing now? Could your bank be next? Stay with us as we delve deeper into this impending banking fiasco. It's a warning for every American bank and a call to action for all of us. We must learn from the past to safeguard our financial future. Then came the fall of 2008, the year the financial world stood still. The first domino to fall was Bear Stearns, a titan of Wall Street. Over-leveraged and intoxicated by risky subprime mortgages, it crumbled under the weight of its own reckless ambition. The downfall of Bear Stearns sent shockwaves across the financial landscape, signaling the beginning of a crisis that would reverberate around the world. Next to fall was Lehman Brothers, another behemoth of the banking industry. Its collapse was the largest bankruptcy filing in U.S. history, a grim testament to the scale of the crisis. The demise of Lehman Brothers marked a pivotal moment, triggering a chain reaction that would engulf the entire banking sector. The crisis didn't stop there. It spread like wildfire, affecting other major banks. Washington Mutual, with its overexposure to risky loans, was next in line. It was seized by the Federal Deposit Insurance Corporation, marking the largest bank failure in American history. Even the seemingly invincible Bank of America and Citigroup weren't immune. Both needed substantial government bailouts to stay afloat. This wave of collapses and bailouts sent shockwaves through the global economy. Trust in the banking system plummeted. Credit markets froze, and economies around the world slid into recession. The housing market, once a symbol of the American dream, turned into a nightmare, with homeowners across the nation facing foreclosure. The fallout was catastrophic, shaking the very foundations of global finance. It served as a stark reminder of the dangers of unchecked greed and reckless risk-taking in the banking industry. But more than anything, it underscored the vulnerability of our financial system and the devastating consequences when things go wrong. The 2008 financial crisis was a wake-up call, a warning shot that echoed around the world. It highlighted the urgent need for greater oversight, transparency, and accountability in the banking sector. It's a lesson we must never forget, because history, as we know, has a tendency to repeat itself. The fallout was catastrophic, shaking the very foundations of global finance. In the aftermath of the crisis, what was the impact on banks and their customers? Let's rewind the clock to the aftermath of the great financial crisis. Banks, the supposed stalwarts of our economy, were left in ruins. Some, like Bear Stearns and Lehman Brothers, crumbled entirely, while others, like Bank of America and Citigroup, only survived through massive government bailouts. This was a clear demonstration of the vulnerabilities inherent in the banking system. But what about the customers, you ask? The ordinary folks who trusted these institutions with their hard-earned money? The impact was severe and far-reaching. Millions of Americans lost their savings. Businesses went under. Homes were foreclosed, retirement plans were decimated. The crisis was not just a financial one, but a human one. It shattered dreams and disrupted lives. And what did the aftermath look like for the banks? Well, there were consequences. Stricter regulations were put in place, aimed at preventing such a fiasco from happening again. Banks were required to hold more capital and reduce their risk-taking, but, as we'll explore later, these regulations may not be enough. For the customers, the aftermath was a harsh lesson in the importance of financial literacy. They learned that banks are not infallible. They learned that their money, their homes, their futures could be at risk if they didn't stay informed and ask the right questions. The crisis was a wake-up call. It exposed the vulnerabilities of the banking system and the risks for customers. It showed us that banks, regardless of their size or reputation, can fail. And when they do, it's the customers who bear the brunt of the impact. So what can we take away from this? The importance of vigilance, of understanding the risks, and of holding our banks accountable. Because at the end of the day, the banking system is meant to serve us, not the other way around. The crisis exposed the vulnerabilities of the banking system and the risks for customers. And with this knowledge, we can better protect ourselves and our financial futures. Stay tuned for the next segment, where we'll unveil a new warning for every American bank. So, what's the new warning for American banks today? Well, the economic landscape has shifted considerably and the fault lines have started to appear. Banks, both big and small, are over-leveraged, meaning they have borrowed heavily to finance their operations. This is akin to building a mansion on a shaky foundation. A minor tremor could lead to a catastrophic collapse. Beyond over-leveraging, banks are also engaging in risky practices. They are lending to individuals and businesses with questionable credit histories, betting on high-risk investments, and even venturing into unregulated territories like cryptocurrencies. All this in the pursuit of quick gains. But as history has shown us, the quest for easy money often ends in disaster. These questionable practices are not just confined to a handful of banks. Alarmingly, it's a widespread phenomenon, cutting across all banks, regardless of their size or reputation. This means the entire banking system is vulnerable to the smallest of shocks. A sudden change in interest rates, a slump in the property market, or a decline in consumer spending could trigger a domino effect, leading to another financial crisis. Remember the great financial crisis of 2008? It started with a few banks going under and quickly snowballed into a full-blown crisis affecting not just the U.S., but the entire global economy. We are witnessing similar warning signs today. The storm clouds are gathering and we could be on the precipice of another banking debacle. But it's not all doom and gloom. If we pay attention to these warning signs and act wisely, we can prevent history from repeating itself. It's time to question our banks, demand accountability, and ensure our hard-earned money is safe. The warning signs are there, and it's up to us to pay attention. Let's not be the silent spectators to another banking fiasco. Let's be the change we want to see in the banking sector. After all, it's our money, our economy, and our future at stake. What can you do to protect your financial future? In a world where financial instability lurks around the corner, protecting your financial future is crucial. It starts with diversifying your investments. Don't put all your eggs in one basket. Spread your investments across different areas like stocks, bonds, mutual funds, real estate, or perhaps even a side business. This way, if one investment doesn't perform well, others may compensate for the loss. Next, let's talk about saving for emergencies. Life is full of unexpected turns. A sudden job loss, a health emergency, or an unexpected expense can disrupt your financial stability. By having an emergency fund, you create a safety net that can help you weather these financial storms without plunging into debt or dipping into your long-term investments. Another critical step is staying informed about economic conditions. Knowledge is power. Understanding how the economy works, being aware of market trends, and keeping an eye on the financial health of your bank can help you make informed decisions. This might sound daunting, but there are many resources out there that can help you stay updated, like financial news websites, podcasts, and even YouTube channels like ours. And finally, remember to live within your means. It's easy to get carried away with a lifestyle that's beyond our financial capacity. But remember, financial stability isn't about how much you earn, but how much you save and invest for the future. Also, don't hesitate to seek professional advice. Financial advisors can provide personalized guidance based on your financial goals and risk tolerance. They can help you create a financial plan, choose the right investments, and navigate through financial challenges. So there you have it. Diversify your investments, save for emergencies, stay informed about economic conditions, live within your means, and seek professional advice. These are not just tips, they're the foundation of a secure financial future. By taking these steps, you can safeguard your financial future. So, what's next for American banks and their customers? The answer to this question lies in our collective action. We've traveled through the past, understanding the prelude, the crisis, the aftermath, and the warning signs. Now it's time for us to step into the future, armed with knowledge and a sense of responsibility. The banking sector, the backbone of our economy, is not immune to faults. The need for reforms is more pressing than ever. We need banks that are transparent about their practices, that don't hide behind complex financial jargon. We need banks that value the hard-earned money of their customers, that understand the weight of the trust placed upon them. And what about us, the customers? It's time for us to shake off complacency. It's time for us to stop seeing ourselves as mere spectators in this grand financial theater. We too have a role to play, so let's step up. Let's arm ourselves with knowledge and awareness. Let's not shy away from asking questions, no matter how simple or complex they may seem. Let's demand transparency from our banks. Remember, it's our right to know how our money is being used. Let's hold our banks accountable for their actions. Let's not let them off the hook easily when they falter. We must remember that banks are institutions that are meant to serve us. They are not above scrutiny, and they are not beyond reproach. Let's also be mindful of the risks. Let's diversify our investments. Let's keep an eye on our savings. Let's be proactive in safeguarding our financial future. Together, we can make a difference. We can usher in a new era of banking that is transparent, accountable, and truly serves the people. We can prevent another banking fiasco and ensure the security of our financial future. The future of banking is in our hands. Let's make it a secure one. In conclusion, the 2008 financial crisis was a wake-up call for banks and their customers. We've journeyed through the onset of the crisis, its dramatic unfoldment, the aftermath, and the ominous warning looming over American banks today. The banking industry is teetering on a precarious precipice, and it's not just the large corporations at risk, but virtually every bank across the nation. Your savings, your home, your retirement fund, all are at stake in this potential banking fiasco. But it's not all doom and gloom. Knowledge is our most potent shield. By staying informed, asking the right questions, and holding banks accountable, we can mitigate these risks. It's our responsibility to ensure the banking system serves us and not vice versa. The storm may be brewing, but we are not powerless. Stay informed, stay vigilant, and protect your financial future. Thanks for watching.